Airbnb is up more than 20% after earnings release. Too late to buy. Today we are breaking down Airbnb's earnings together and I'll tell you what I think since I hold shares in my portfolio. If you don't want to miss my buys, my sells, and my real-time stock analysis, we talk about it every day in the Discord group, link in bio. Let's get into it. Airbnb released its Q2 2026 result on August 6th. After market close, and the numbers were strong across the board. They beat expectations on every single key metric, and even more importantly, they raised guidance for the rest of the year. Before we dive in, for all the charts on financials, historical KPIs, and the valuation I'll show you in this video, I use justDCF, the platform I use to speed up fundamental analysis and fair value calculations, link in bio. Let's start with the data. Revenue $3.6 billion, up 17% year over year, above the high end of guidance. Gross booking value $27 billion, up 16% year over year. Nights and experiences booked up 10% year over year, accelerating from Q1. ADR, average daily rate, up 5% year over year. What struck me most was the growth in new users. First-time bookers grew 11%, the fastest pace in 4 years, and within that number, the Gen Z cohort is growing the fastest. For a mature company like Airbnb, that's not something you will take for granted. On the profitability side, net income $800 million, adjusted EBITDA $1.3 billion with a 35% margin, expanding by over 100 basis points. Free cash flow $1.3 billion in the quarter, $4.8 billion over the trailing 12 months, a free cash flow margin of 37%, which is simply massive for a company of this size. And let's not forget shareholder return, $1.1 billion in buybacks in this quarter alone. Here's why the stock jumped so much. Management raised their full year estimate. For Q3, they expected revenue between $4.6 and $4.7 billion, up 15 to 17% year over year. For the full year, revenue growth was revised upward to at least mid-teens from the previous low to mid-teens guidance. Full year adjusted EBITDA margin was raised to at least 35.5%, up from 35%. Rising guidance after an already strong quarter and doing it despite tougher comps in the back half of the year is a very strong signal of confidence from management. CEO Brian Chesky was very clear on one point during the call. There is no single product behind this result. It's a structural shift in how Airbnb builds products, driven by AI. Some concrete numbers he shared. Time from concept to launch has been cut by as much as 60%. The number of features shipped in the first 6 months of the year increased 80% year over year. The AI customer support assistant is now available in over 50 languages and resolve about 45% of tickets without human intervention. Customer support cost per booking dropped 16% year over year. Chesky also talked about tests on AI-powered search, which will roll out as an optional toggle so as not to disrupt existing user habits. The stated goal is to reach a point where you can literally say, book me a 2-week trip to Scotland, and Airbnb organizes the whole thing for you. Chesky candidly admitted that his expectations for hotels were too low. He expected to build the best hotel booking product online, and they did, but he didn't expect the massive interest from hotels themselves in listing on the platform. Let's see some numbers. Hotels today still represent a single-digit percentage of nights booked, but they are growing roughly 3 times faster than homes. About 35% of guests who book a hotel on Airbnb for the first time come back and book a home. This is the flywheel effect Chesky talks about. Hotels aren't cannibalizing the homes business. There are a few other elements I think deserve attention. Number 1, reserve now, pay later. Already over 20% of total GBV runs through this flexible payment option, and it was expanded further in July. Number 2, single host fee. About half of active listings have already migrated to the new simplified fee structure, with completion expected by year-end. Number 3, AI-driven dynamic pricing. Chesky called this one of the biggest growth levers of all. saying it's multiples more impactful than reserve now, pay later. Number 4, services like car rentals, grocery delivery, luggage storage, mostly partnerships, so very low incremental cost for Airbnb, but they increase platform stickiness. So what I think, as you know, I hold Airbnb shares in my portfolio, and after this earnings report, my view is even more convincing. For me, Airbnb is a magnificent compounder. It has a capital-light business model, extremely high free cash flow margins, an incredibly strong brand that's basically become a generic known, and it's proving it can reinvest intelligently into new growth areas, hotels, services, experiences without compromising core profitability. That said, this isn't a financial advice. Always do your own research, but for me, with a long-term view, it remains one of the stocks I want to keep accumulating over time. On valuation, I already did a deep dive on this in a previous video with a full discounted cash flow, where I explained why I thought the market was wrong to value Airbnb at $130 per share. I think it's somewhere. If you missed it, go check it out because I go into a lot more detail on the business there. Today, instead, let's do something quicker, a reverse discounted cash flow, to figure out what the market is pricing it at the current price. Stripping stock-based compensation out of free cash flow and using a 10% discount rate and a 15x exit multiple on free cash flow at year 10, it turns out adjusted free cash flow needs to grow roughly 10% a year to justify today's price. If we look at analyst estimates, they are expecting around 10% annual growth through 2030, so on paper the price is already fair according to consensus. I think those estimates are too conservative though. With all the optionality we have seen today, hotels, services, AI pricing, experiences, I see room for either higher growth or further margin improvement. Again, if you want a more detailed breakdown of the business, check out the other video. That said, for me it's still a good price. The thesis is on track and I still consider it a solid buy. If you enjoyed this video, drop a like and subscribe to the channel, it helps a ton. And if you don't want to miss my buys, my sells and my real-time stock analysis, I share it all in the Discord group, link in bio. See you in the next video, take care.